Joining us today is the informer stock market guru, Mark Wenzel from the Hopkins Group. G'day, Mark. Week 2, you've actually come back. So how have the markets performed this week?
Yeah, thanks for having me again, Michael. It's been great to be with you. So yes, obviously, again, we talked a little bit about reporting season last week, and one of the companies we did talk about was BHP taking over Oz Minerals, and they reported profits this week, and again, nearly a record profit. It was the second biggest profit in their history. The only last time it was due to the high Australian dollar, which pushed their profit above that. But the profit was around $40 billion, and they're paying $30.4 billion in dividends to Australian shareholders. Which is, again, the highest on record for BHP. And interestingly, that sort of funds the industry funds. So they're all big shareholders in BHP and retail funds, which, again, is going to benefit from those massive amount of dividends.
Great. Superannuation, I'll be able to retire by the time I'm 99.
Well, exactly. Obviously, with big profits from BHP, maybe a little bit earlier than that, Michael.
Now,
but interestingly, with BHP, 47% of self-managed super funds own BHP shares, and there's about 1 million self-managed super funds out there. So 470,000 self-managed super funds are benefiting from BHP's record profit.
Great. And now, with the reporting season that you mentioned, there seems to be a bit of a resurgence in the market. What's driving that?
Yeah, so again, obviously, good profit results is certainly part of the driver, both here and in the US, where they reported second quarter earnings, which have been pretty strong. But I think sort of part of the driving of the market in the recent times has been a bit of a recovery. We had a really big fall, sort of 20, 30% in the case of the NASDAQ. But certainly, over the first 6 months of the year, we had sort of that 20 or 30% fall. So I think it's been a little bit of a relief rally, perhaps some market expectations that inflation is not as high as what they thought it was going to be, which might mean interest rates are going to be not as high as they thought they were going to be. But, again, it's still pretty early days. So rallies during down markets aren't uncommon, and they can happen pretty quickly. So it'll just be really interesting to see what happens over the coming months around interest rates and inflation and what impact that has on the market.
Short term, or do you think we'll be able to continue and sustain the strong rebound that you've mentioned?
Yeah, my expectation is that over the next 3 to 6 months is probably the market's going to track sideways a little bit, depending on what announcements are made and what forecasts are out there and what the central banks do around interest rates. But so, yeah, I certainly think that, we've had a big fall. We've had a decent sort of a rally, up around 10 or 15% again for some of those technology companies, perhaps a little bit more than that 15%. So it's a decent sort of a rally. And then now it'll really just depend on, some of that economic data. And we've had economic data out today that the unemployment rate in Australia has dropped to 3.4%, which is like a 48-year record, back, after the war efforts, in the late 40s, early 50s. So, economically, things are going really, really well. And it's just a matter of, seeing whether that inflation can come back under control. Depends on what happens from here in relation to markets and obviously interest rate expectations.
Right. We saw JB HiFi predict a fall in sales on the back of their rising rates and consumer confidence, but they actually proved themselves wrong.
Absolutely. So, I mean, again, obviously the experts out there all had predicted that JB Hi-Fi was going to, have a reduction in sales and obviously struggle with price rises. But the complete opposite has been true. And, they've had sort of 9% growth in their profits, with 11% growth over the last quarter. So that sort of indicates the strength. And during their profit report, they were adamant that there was no sign that any consumer concerns about rising prices coming through or any concerns about consumer spending, which is a really strong indicator that, that the economy is going well, people are comfortable with their jobs, that, the interest rate rises have been, significant so far, but perhaps they're not having the impact that the Reserve Bank wants them to have to slow down that consumer spending, so to try and get that inflation under control. So that might indicate that there's more interest rate rises to come.
Yeah, hopefully this isn't going to confound the Reserve Bank and spur them on to even greater. Now, the federal government announced the focus on the upcoming Jobs Summit in September. What are the 5 areas that they said they were going to focus on?
Yeah, so again, the Job Summit's it was a key plank in the Albanese government when they came in to try and improve, the employment across the nation, and so they wanted to set out the terms of that summit and what the key focuses were. So the 5 key areas of focus were full employment and growing productivity. So again, we're pretty close to full employment, but trying to get people to be more productive and deliver more output, is an important part. Boosting job security and wages. Again, that wages piece flows into that inflation piece, but again, for a long time, wages growth has been really low, and with inflation rising, it's even sort of tipping into negative. So having real wages go down. So again, that wages growth becomes an important part. Lifting participation rates and barriers to employment. And I think this is going to be a key area. Obviously we've got a lot of people that are retired that have a lot of disincentive for working. So if they work more than one day, it impacts their pension. So I think there's a lot of movement and a lot of discussion that can occur around, the barriers to employment, and perhaps also around, as I say, that retiree area. So there'll be some opportunities there. Delivering a high quality labour force and skills and training and migration. So again, obviously the migration part, is often flagged as being the panacea, but in a lot of cases, that's, the government needs to catch up with that as well. They've got a lot of bureaucracy around migration. It's difficult for migrants to understand what their responsibilities are when they get here and how they can sort of benefit. So I think there's going to be some potential looking really at the government setup as well as to what limitations they're having on having migrant skilled and unskilled labour coming in. I mean, interestingly, I sort of saw a stat that unskilled migrants produced $2.3 million over their lifetime for Australian GDP, and skilled immigrants double that at sort of about 4.6 million. So it shows the importance to Australian growth around having immigration come in. And then the other one is maximising opportunities for industries of the future, and largely this is looking at the green energy and the move towards decarbonisation and electronic cars and batteries and all of those sort of things. So again, I think that's going to be an important feature as part of the Job Summit coming up on the 1st and 2nd of September.
Great. Well, Mark Wenzel from the Hopkins Group, thanks for the market update, and we'll see you again next week.
Terrific, Michael. Thank you.